Good morning, good afternoon, good evening, Alpha Traders, and all you others out there watching in YouTube land. We are Alpha Trading. We trade volatility, probability, and statistics. Right? And I'm excited. You know, I stumbled upon somebody on a video, an old friend of mine, and I'm realizing that he seems to understand volatility better than he used to. He really does. And we agree on a lot of things. You know, I always talk about trend. I always talk about volatility. To me, those are the most two important things, right? Everybody that's been watching this for a while knows I talk about it all the time. So the first two things is the gentleman talked about was trend and volatility. So that kind of, I didn't even know that he was on this video. You know, sometimes I watch Elio just from some crypto stuff, and boom, all of a sudden I see an old friendly face. And I was like, what the hell is this guy doing on here? And he immediately just starts talking about volatility and trend, and I was like, I just started laughing. Could there be a little bit of a video collaboration? Will Bilbo be brought on to talk about volatility at some point? I don't know. We'll see. I got a message out to him. Maybe I'll wake some other people up. But let's get back to our charts. What do we do at Alpha Trading? We create the best volatility, probability, and statistic indicators in the entire space, in our opinion, and in a lot of other people's opinions. What you're looking at here is our projection bosses. Projection boss 1 and projection boss 2. Projection boss 2 is used for longer term projections. You can use projection boss 1 for that, but you got to step up the projection size. And so then it'll take, our nice solid lines where you get a better read and it dashes them out a little bit. So I like to use projection boss 2 for the longer term projections. Now, if you go back to the stream yesterday, I was talking about keep an eye on these projections. I've got the long term going from the 28K low, right? I've got a short term projection from the 41K low. So I talked yesterday about both of these 95.4% Laplace distribution ranges starting to come together here, right? You see that? And now look what happened today. What happened today on the down move? Where did we bounce from? We bounced from this longer term projection, top side of the 95.4% Laplace distribution range, pretty much to the dollar. What else is right in that range? I can tell you just right off the top of my head. The weekly current candle, 68.3% Laplace distribution range to the downside is right there. The top of the price action volatility range is there, right? The first standard deviation normal distribution to the downside is there on this daily candle. So that, friends of Alpha Trading, was a magnet for price action. A lot of stuff here, right? Here's today's daily volatility range. The green line down here, that is the first support level for this daily volatility range. So the pink dashed line, that's the 68.3% Laplace distribution range to the downside on the weekly candle. Blue cross line, first standard deviation normal distribution on the daily candle. Red dotted line, top of this week's volatility price action volatility range. Okay, and you can see also down here on this current 4-hour candle, this thin white line, this is the 68.3% Laplace distribution range on this 4-hour candle. Last one of the day. Can we get rid of these traditional market kooks, right? Does anybody notice a little bit of a trend here? And I woke up a little grumpy because I got up at 5 o'clock, had my alarm clock set, right? Wanted to watch the pre-market in traditional markets. When I woke up, let me see, am I on UTC 7? I am. All right, here is where I woke up, right here. I watched Bitcoin climb up to the top side. These white cross lines right here, this is the daily 68.3% Laplace distribution range. I was watching the climb up to the top side of the 68.3 that was literally happening pre-market, right? Institutional markets. This was happening during pre-market. What happened right about here? I dozed off and went back to sleep. So I was a little grumpy when I woke up. Why? Because I slept through the opening bell of traditional markets. What happened right at the opening bell? That did. And I'll show you in the charts in a minute. No brainer for volatility traders. That trade was all over the charts. Yesterday, same thing. Same thing happened. Let's see here. This move right here. We dumped down to the S1 of that. That's the first support level of this daily volatility range. Pre-market climbs right up. Where did it climb up to? It climbed up to the weekly R1. That's this red dotted line. Right when the opening bell happened, straight down. Okay, so do you see what's going on here? Is everybody understanding? Do we know now there's 2 Bitcoin ETFs, right? We got it. We launched last week, launched one this week. There's a reason why this is going on, right? These people probably want to get in on these ETFs a little bit lower because in my opinion, these aren't really gauged for retail traders. There's no options attached to them. You don't own the underlying. Why in God's name would you want to buy these ETFs if you don't own the underlying, right? Doesn't make any sense. Do you think all these retirement funds are going to pick up these ETFs? Hell no. They're going to want people to own the underlying. There's no doubt about it. And here's the thing. Everybody's all excited. Hey, Bitcoin ETFs are launching. You guys, why do you think they're being allowed to launch? Because of those 2 facts right there. There's no options attached. There's no freaking underlying. You don't own the underlying. Okay? So all these ETFs that are going to be launching, they're using the same language to get these things launched. All these companies are going, oh my God, I've been trying forever. Then a lot of the smart ones are still going to just back off and be like, well, that's not the ETF I want. That's not how I want to launch our company's ETF, right? So probably a lot of them are going to hold off a little bit. So everybody thought this was going to be a big thing, big launch. Hello, right? We get to our 67K high, a little bit over 67,150 or something like that. And since that time, right? And if you guys did notice too, the biggest scammer on the planet, who everybody just praises, Mr. Elon Musky britches, right? Puts out a tweet right then, right? Posting the all-time high of Bitcoin, I don't know if it was the all-time high of Ethereum, but posted like a little couple laying into bed, looking all cute, little animated thing, looking at the TV screen of the all-time high. What happened since then? Now, if everybody remembers, Tesla put $5 billion of Bitcoin on their balance sheet, right? That's a lot of Bitcoin. How much did he buy personally? If Tesla bought that much, right? And this is just my opinion, but I don't think these large companies, right? They have investors. These investors aren't looking for this company to buy $5 billion of Bitcoin, put it on their balance sheet, and then trade the shit. This is not Tesla selling Bitcoin, but I wouldn't be a bit surprised at the same time that he bought $5 billion of Bitcoin for Tesla, that he did the same thing for himself, right? And he posts these stupid ass tweets and then he starts selling. And here's what I was talking about in the Discord earlier this morning, right? I saw a couple posts I really didn't like. I was already grumpy, so I jumped somebody's butt a little bit. But I tried to explain what's going on here. People think that these sells are what is creating this volatility, right? For the price action to go to the downside. Is what people don't realize, volatility is creating everything. So what created this down move? So people are saying, well, Bilbo, how did the volatility create somebody to start selling? Because it was the volatility going up to 67K that created an imbalance in the buy and sell pressure. What is that? What is an imbalance in buy and sell pressure? It's divergence between returns and price action. And when that happens, that volatility is going to create the move that's going to make people sell going back to the downside. I hope everybody understands that and knows what I'm talking about. There's not a lot of people out there that have figured this shit out. When you stare at the charts for long enough and you understand returns and you understand how and you understand price action and how they are intertwined, and how the only divergence that matters is between the returns and price action. Why is that? What are returns? It's the return on your investment, correct? So when there's an imbalance in buy and sell pressure and there is a divergence created between returns and price action, what is that telling you? Hey, trader, the return on your investment is diminishing. There is an imbalance in the buy and sell pressure. It's time to get out of that position. And I put this in the chat earlier. Look, futures were created to hedge options positions. They're not created to hold long-term delta positions. This is why people get wrecked all the time. And they use leverage on top of it, which is just ridiculous, right? I'm not saying leverage is bad. I'm saying if you're ever over 5x, I'm going to say it right now, you're way out on the spectrum, right? I'll even use the R word here. You know what I'm talking about. You should never use over 5x leverage. And if you are using up to that much leverage, you better know what the hell you're doing. Futures, if you can learn how to scalp futures, that's what they're for. Scalping delta. Not sitting in long-term positions with delta. No. If you're going to get in long-term, couple-month positions, just trading delta. Say you just want to buy some premium. Trade options, for crying out loud. Use the futures, right? So every time that option position goes against you a little bit on its ride up, say you buy a call, right? And it turns around on you for a little while. Sell the underlying. Sell the future positions. Right? The options position is going to appear and literally on paper, it's going to show a loss. But when you sell the underlying on the pullback, you're gaining in that position, right? So you're not losing any money at all. And as soon as you realize there's going to be a little short-term trend change, you're going to get back on track. You release that options position. You release that futures position. Right? And the premium, you start creating more profit with that options position, if that makes sense. This is how futures are supposed to be used, but people are just out there getting in these massive futures positions, 5, 10 Bitcoin longs. And the big, now, if you number one, if you're trading that kind of volume and you're trading those types of positions, I would highly recommend not using leverage at all. That's the problem people get into. They'll put $5,000 in an account and they're longing 2 Bitcoins, 3 Bitcoins, 4 Bitcoins. Holy shit, you're way over leveraged. Organically grow your account till one day, hey, I've got a Bitcoin in my account. Now I can trade $60,000 positions and not be leveraged at all. This is how you really want to trade this market. This is not financial advice. This is just common sense. This is common sense. If you want to be successful doing this, I talk about this all the time. Knowing what I just said, you also need to know this, right? There's a few different things you need to understand. Number one being, don't ever be emotionally attached to a trade. Ever. That's the only trading psychology that you need to know. Any other of this trading psychology bullshit that's going on out there is exactly that. It's total bullshit. And it's usually being shoved upon you by somebody selling a psychology program or selling a book, Mr. Douglas, right? Or some other people, I won't even mention their names, that are selling these psychology courses, trading psychology courses. It's all bullshit, right? What are you telling somebody? Hey, you need a journal. You should get a journal. You need to write your feelings down. How did you feel when you got into that position, right? What? Huh? How did you feel? How did you feel when you lost? Right? Tell us all about it in the journal. It's hogwash. The only thing you need to know is don't be emotionally attached to the trade. Because if you're not emotionally attached to your trade, what does that allow you to do? The other two key points. Number one, it allows you to take your profit. Take it often when you're scalping futures, right? Like this move right here. Boom, take your profit. This short, boom, take your profit. This long, boom, take your profit. This short, boom, take your profit. It's a no-brainer. You understand what I'm saying? And what's the third aspect of this? Limit your loss. Right here. Say you get this bounce right here. You get this bounce. This was the down. This is the first standard deviation yesterday to the downside, normal distribution. Say you get in a position right here. This bad boy rejects off the top side of the 68.3 Laplace distribution and comes down first to the daily S1. That is the daily S1 for the price action volatility range right here, right? So if you get into the position here, you need to have a mental stop loss. Now, did this thing bounce after that and take off? Yeah. But what if it didn't? What if right now it goes to the 2SD instead of getting this little relief pump and then making its way down? What if that happens? Guys, you're losing your ass. Limit your loss. Now, how do you do that? You got to have like a mental stop loss. Don't put a stop loss in the system and always monitor your trades, right? We're talking about scalping delta, scalping futures. There's no reason why you should be in a long-term position where you have to put in a stop loss. Monitor your freaking trade where you can sit here and when this thing turns against you, depending on how much you're exposed in this trade, have that in your head. How much do you want to lose? You want to lose 50 bucks? You want to lose 100 or 200? Where are you at? Set up a market sell. Have it ready just in case. That's all a stop loss is. It's a market sell or a market buy to get you out of a position. What's the difference between putting it in the system where the exchange operators that are trading against you can see it? This is the problem. This is the scam that's going on. All these retail traders are being taught these same risk management strategies. Oh my God. This is what creates so many wicks that take people out of positions, right? They don't understand that all these retail traders are being taught the same BS. They all put their stop losses in the same spot. When that exchange sees a bunch of these stop losses in the same spot and they are trading against you, they're just like, oh, here's easy money. Look at all these idiots that are about to be on the other side of my wick. Wham! They hammer it. You don't put your stop loss in there, especially where all these other donks are doing it, right? You don't want to do that, man. Have it mental. Get the hell out of the position. And so say you get out. Say you get in right up here, maybe not on the bounce, and you're like, okay, this looks good. Boom, I'm going to get in right here. As soon as this thing gets back to the 1SD, just get the hell out of the position. Then, now how do you know when to do all this? By looking at the volatility charts, the other alpha trading indicators, right? To see what's going on. That's how you do it. Then maybe you get back in on the correct entry, right? Down here. Maybe you thought the 1SD was the correct entry. Whoop, it just rolled over and went to the S1 on the daily and then pumped its brakes off for a nice scalp. When you hear me talking about pumping its brakes off, dumping, or whatever, it's these nice little moves. This is how you become a successful trader, right? This is how you skyrocket your P&L. You're not emotionally attached to your trades. You're taking your profit often, and you're limiting your losses, right? You're not putting stop losses in the system and getting whipped out like all these other people, right? You're out before them. That's another thing. Right? So what are all these donks using? They're using ATR or they're using data sets. So what people don't realize, what creates these data sets? Volatility. Why not have a whole chart full of freaking volatility indicators to tell you what the hell is going on? You cannot count on these levels. You cannot count on these data sets. Like traditional technical analysis is going to want you to put support and resistance levels here. The only support and resistance levels that I even look at are what is created by the daily volatility ranges or the weekly volatility ranges, or the monthly volatility ranges for price action. Those are the only ones that matter. Do they work all the time? Yes, they do. They always do. They never let you down, right? And what else is on this chart? That the distribution levels, right? You need to know where all these levels are at. This is why people sell bottoms, buy tops, have no clue what the hell they're doing. They might as well be throwing darts at a dartboard like the monkeys, right? You guys do know that, right? That monkeys throwing darts at a dartboard out trade retail traders. Just guesses. Whoop long, whoop short, whoop long. I mean, okay. I mean, you guys know I harp on this crap all the time. Why do I? Because I feel like I have a responsibility to help people, right? Because I've been blessed. So it's like I want to share what's made me a successful trader. And the biggest thing is limit your loss. This is one of the things that wrecks people all the time. Maybe you're taking your profit, but are you limiting your loss because you're a stubborn ass? No, that was a good entry. I'm going to sit in it. It's going to bounce here, and then boop, 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 down it goes. Just wrecks you. And then you're getting out. And then when do you get out of the position? Probably right around where it's about to bounce. And then you're just like, then your head spun. You're like, holy shit. Well, people don't know what the hell they're doing. It's incredible. Where you need to understand, right? What is the standard deviation of returns? It's volatility. Volatility creates everything. And it damn sure creates the imbalance between buy and sell pressure, right? That creates a volatile move in the other direction. Divergence, not relative strength divergence, not stochastic divergence, not MACD divergence, none of that. Because some of the times that shit fails, right? Yeah. Divergence between price action and returns never fails. You just need to understand how to read it, right? And so when there's a divergence move setting up, you don't just trade it blindly. This is what these people in traditional TA do. There'll be some div and they'll just trade it blindly. Oh man, there's bear div. Oh shit, I'm going short. Uh-oh. And what's it do? It goes up and creates another stab of bear div. Oh shit, now I'm going to increase my position because I didn't get out of the trade because I'm an absolute moron. So, I see what it was doing. It's creating another stab of div. Oh, well, I'm going to increase my position here, right? So it starts to go down a little bit again. Okay, now I'm on the right track. Whoop, third stab of bear div. Now you're freaking liquidated because you're adding on to a position where you shouldn't be taking entries anyway, because when you're trading that divergence, you're not looking at the volatility. Is the volatility telling you this thing's getting ready to turn around because of that div? Or is it telling you this thing's just revving up? This is just a quick little pullback. It's going to bounce up again, probably create another stab. You got to look at these things. Then you'll get on the right track. You'll know when to take these divergence positions 100%. It just takes a little time. I'm not saying this is easy, right? When I'm in an active trading session, I am bouncing between these three charts, right? Nonstop. And not only am I bouncing between these three charts, I'm bouncing down through the daily time frame, right? Come on, TradingView. I know they're powerful indicators, baby, but you got to load this stuff. When I get a new day, first thing I do when we get a new daily candle, I'll give you a little workflow. I'm over here, right? I'll turn off my projection bosses. Let's get these babies off. I turn those back on once I see where these daily ranges are. I want to see where the current daily candle 68.3% Laplace distribution range is. the 95.4% Laplace distribution range is and where the 99.7% Laplace distribution range is. Same thing. I want to know where the first, second, and third standard deviation of normal distribution is, right? Once I check that out, once I look for the confluence between the two distribution models, right? How close are they together, especially at the 2SD range, which is the 95.4 Laplace distribution range? These are things I look for. I'm always, everybody that knows me, when a new day starts, I am looking for confluence between distribution levels, between price action volatility ranges and their supports and resistances, right? The 4-hour distribution levels, how are they lining up on the first 4-hour candle with the daily levels? Right? Is there a 2SD on the 4-hour distribution that's right on top of the daily 1SD to the downside? Is it right here? Is it right at the top of the weekly volatility range? Is it right by a weekly 68.3% Laplace distribution range? That's why price action's stifled here right now, you guys. This has got nothing to do. Oh, look, the bears or the bulls are down here. Yee-hoo! Sticking their horns in the bear's butt now. We're going to rip up. Be careful. The fact this thing hasn't ripped back up, that's when you're going to know the algos are on the job. First, understand 90% of the trading going on, and that's just an approximate level, is being done by algorithms. High-frequency trading firm algorithms, what are they programming their bots with? They're programming with volatility, probability, and statistics, right? Why people are trading traditional TA. Why do you think they have an endless supply of people on the other side of their trades? That is the exact reason. Everybody always, I see people talk about it all the time in different Discords, Twitter, and all this bullshit of how these firms are programming their bots with Fibonacci levels and this, that, and the other. It's hogwash, man. They're not, right? Go talk to Coding Jesus about this shit. He'll back this up 100%. He's just like me. We're disgusted. We are disgusted with this traditional TA stuff. But look, it's a cult, man. Straight up. It's being pushed on to retail traders for a reason. And there's a reason why. 90% of traders lose 90% of their count within 90 days. I'm dragging that down to 30 days. Because especially with this volatility going on, think about it. It's insane. But people don't see this, right? They don't want to believe that the smart money, who's the smart money? These firms, hedge funds, right? They're the smart money. They call the retail traders the dumb money. I mean, what do you need to know, right? You're a feeding ground. It's like you're minnows in a shark tank, man. And I talk about this all the time. When the alpha traders, when we jump into this shark tank that is trading, that is scalping futures, there's these big ass mechanical sharks swimming around. These are the algorithms, man, and they are just feeding on all the minnows. It's the retail traders. And then they look over and they see the flesh and blood great white sharks. We're in there swimming with them. And they're just like, oh, a couple people get it. Come on, let's eat all these minnows together. That's why, if you understand all this, you're always on the right side of the trade. You're recognizing this is what this chart does, and this chart does. These are indicators to let you know what is happening. What are the algos doing? Simple as that. I can't put it any more simpler. Yeah, Yasha, you know, it's just like... It's like we don't know what we need to do. What's that? You're pretty. Yeah, you're cutting out. Well, I can barely hear you. I don't know if it's just me.
When it was a rule, people had much lower leverage access. Now you've got up to 100x or even 125x leverage. So of course people are blowing out their accounts a lot faster. Anyway, yeah.
Right. Yeah, 100%. Oh, I could hear you good there. I'm just getting in this stream chat. Okay, Andy. Yep. He's probably got some meetings. That's another thing you need to realize. What the founders of Alpha Trading, besides me, right? It's like I see these guys, they actually got real jobs. And if you didn't know, I'm one of the 6 founders of Alpha Trading. These other guys got real jobs, and they're high up in what they do, and they are very busy. So what we've all done to put this community together, build these indicators and stuff, you have no idea how amazing it is and how fast this thing came together. That's how dedicated everybody is. We all fill a role. We all fill a role. Because every one of these people, they either own their own company or they're way up high in management in big corporations. Andy, for an example, right? Donnybrook, for an example, right? I mean, and everybody else too, trust me. So this is what we do. We're on a mission. We're on a mission to help people. So I hope people recognize why we're doing this. Let me read this chat a little bit. Yeah, oh boy. Yeah, NFTs, huh? Man, this is the problem. And as soon as I got into the NFT space, I see a lot of chatter in Discords, and people are like, yeah, there are a lot of NFT projects out there where people lose money on them. You gotta make sure you get in the right project, right? The best ones are the ones that they explain everything on their website. Their team is doxed, right? They follow their roadmap. They never waver. These are the projects that are going to succeed. There's a lot of rug pulls out there with these projects. People beef them up, and then next thing you know, they're gone. Well, their team wasn't doxed. There's all kinds of red flags, and people, because they get into these communities, right? These hype communities, and they think just because there's the hype community, this thing's going to rock and roll. And another thing people need to realize is when Bitcoin's going on a run like this, NFTs are going to suffer. NFTs are definitely going to suffer. But when Bitcoin goes sideways, has pullbacks, things like that, that's when NFTs will start to come back. Right now, they're all down across the board. And there's a reason why, because Bitcoin's on a mission. But like NFT-wise, I mean, I tell you what, I was super hyped on Soul Yetis. Yet to be seen. These guys supposedly are going to right the shit because they did one thing. There's one thing out there in investment land that will crush your project, and that is changing your roadmap. You don't change your freaking roadmap. That crushes investor confidence, and they did. But they're promising that they are going to get it all figured out, and they're getting back on track. We'll see. I got no confidence in them at this point, right? But at the same time, I haven't sold. I'm holding. I want to see if they're going to prove themselves to me again. But Solana and Cardano, right? Ethereum's been popping out all these NFTs for a while now. There's only one project that I would like to get, or if projects start launching on Immutable X. Immutable X is a platform where if NFTs launch on Immutable X, it eats the gas fees. There's no Ethereum gas fees for these NFTs. This is the problem with NFTs on Ethereum. And people are like, oh, well, you just make so much money. It's all good and blah, blah, blah. All the NFT projects aren't like that. So if you get into an NFT project on Ethereum and it's floundering and you want to get out of the project, not only are you going to lose your ass because you probably bought over mint or prices below mint, you're going to have to absorb the freaking gas fees. You're going to lose even more money. That's why Solana is in its NFT infancy. Cardano's in its NFT infancy. There's great projects on there. I really like ADA Ninjas, right? I've talked about that before. It's a great project. And these guys are in it for the long haul, right? Read about that project. Very powerful. And in the beginning here, Soul Yetis was. They better get back on track. They better get back on track big time. Bilbo might jump shit. Not that they even give a shit, but I'm just saying. There's a great one coming out on Solana, Beverly Hills. What is it? Is MJ, you in here? It's Beverly Hills Classic Cars or something. It's literally launching in a day. It looks real cool. Because here's what I think. Like, if these founders stick to the roadmaps, right? And they do everything. I mean, it's the roadmap. You got to do everything you say you're going to do, right? And if you've got a good product, something people are actually going to use, right? And one of the big things they're doing is paying back royalties, right? Royalties of sales, of trading volume and stuff. That's huge, man, because if you look at it, especially in Cardano, if you're getting royalties back, sometimes it's going to be better than the staking rewards for just having your Cardano sitting around. You buy the NFTs, you get royalties, and the NFTs could explode. And one day you sell those things, boy, that way outdid the staking rewards, and all that Cardano was slamming right back in your wallet. It's a beautiful thing. But there's a lot of projects out there. Everybody's got to do their own research, and there's a lot of good yield farming stuff, which I'm just getting into as well. It's been around for a while. There's a lot of good projects out there. Let me see. Let me read more here. Yeah. I mean, Axie. It's just a little late to the party on Axie, in my opinion, because number one is what I've heard. It's not that great of a game. There's a lot out there that are just whoa. Like, check out Chain Guardians, check out, and there's NFT platforms like Altura, like Ronin Games, GMZ, not S. There's just a lot of good projects out there, right? But like I said, everybody's got to do their own research. Everybody's got to. I'm not going to sit here and shill projects, and I'm going to be full disclosure. It's like some of the things I've mentioned here, I am invested in. So. Yeah, you need to know that. But like I said, this is not financial advice. I have a addiction, so I don't want to drag anybody else into it. Let's see. Read some of this. Make sure. Okay. Yep, there it is. Beverly Hills Car Club, and that is launching tomorrow, I believe. It looks really cool. Get your Solana ready. Get that Solana ready. Okay, let's get back on track here. What time is it? Holy crap. That was 40 minutes real fast. That's the biggest problem here. So what time frame on here? The daily. First off, let's go back to this 4 hour. Let's talking about, we've got a reverse wave trend over here. I believe we're a little bit below it right now. Let's see what happens. Let's let this thing populate. Yeah. It's a little bit below it here. The wave trend is changing. You're going to need to get above here. As you can see on this whole run up here, from down at that 41K low, we got up above it. It's just been bouncing off this reverse wave trend. That would have been a great place. I was talking with MJ yesterday. I was like, man, this is really familiar looking, like back here. We're just sliding along the bottom of the wave trend. We're going to get another launch point. Well, these institutional people taking profits, man, they've pushed this thing below. But I could actually see a little weekend rally here in the other direction. Let me see what's quick. Check something out. Oh, I was over there. Hold on. Oh, it's Solana. People are taking profit in Solana, it looks like. Yeah, both on the long and the short side. Not a lot of people are getting out of their longs, but shorts have dropped off tremendously, right? Everybody, all these shorts are taking their profits down here. Why? Well, Bitcoin's bullish as hell. I don't care what anybody says, right? We just have these little pullbacks. People are going to take profit. I'm never shocked by anything volatility does, but I was a little surprised Bitcoin got barely a brand new all-time high. I mean, what, $1,500 above the last one or something? And then it's going to do a pullback. Let me see something real quick here. Let's do a little measurement. Where are we at right now from peak? Yeah, I mean, it's been about a 10.5% move. That's been on some of these little pullbacks here. I mean, this one right here. Let's check this one. Let me straighten this out here. Get a good read. That was pretty similar. It looks about an 8 maybe. And now, did we see this coming? Yeah, 100%. Yeah, it's about a 7% actually. So I mean, this is what I really want to see coming into this weekend. I want to see this 4 hour get above the reverse wave trend. what's going on over here on the volatility, right? I mean, it's all the stuff you want to see for that to happen. Why do I say that? The 636 AVR here, right? That's my settings on that, the lengths. It is contracting, negatively correlated. The 981 is flat, negatively correlated. The 2400, flat volatility, negatively correlated. What are all these telling you, right? That price should be walking up. When you have flat correlation or flat volatility or contracting volatility and it's negatively correlated, that's usually going to walk price action up. And what does that usually do? Through the whole contraction as you're negatively correlating and the price is just slowly walking up. Here's a good example right here on the low length, right? Look right here where it starts contracting down, negatively correlated. Look at the price, just steadily, just walking, walking, walking. Then you get an expansion in volatility. It shifts into positive correlation and price action explodes again. So contraction and negative correlation usually ebb and flows into an expansion positively correlated. Just like contraction positively correlated will start a walk down, and that ends up turning into an expansion negatively correlated that sends price action rocketing down. This is how correlating volatility to price action works, and it works. I don't care what anybody says. I'll make them a believer within a 15-minute conversation. It's just the way it is, and not too many people know this, right? I mean, I've been working on this volatility thing for about 3 years. And I figured out that if you took a Pearson correlation and you correlated that volatility to price action, it gives you direction. There are still people out there saying volatility is non-directional. Yeah, it is if you're just using volatility, right? If you're just using contraction and expansion, you don't know when the expansion happens, if it's going to go up or down. But as soon as you use a Pearson to correlate that volatility to price action, you get direction 100% of the time. That's the only thing in this whole damn arena that I will say for sure. It just works. It's just the way it is. Volatility is the king of everything. And when you figure out how to correlate that stuff and get direction, it's really helpful. Same with our entropy indicator, right? This is our AME, our alpha mean entropy, or our absolute mean entropy. Sorry, I got alpha on the brain, right? With the entropy price percentile on the top side here. Entropy on the bottom, entropy price percentile on the top. What is the EPP? The EPP is R squared. What's R squared? It's the coefficient of determination. It's going to tell you the correlation of the entropy to price action. So when you see entropy, when entropy is yellow or pink, right? It is literally in a state of randomness, right? That's what entropy is. It's going to tell you when something is random. But as soon as it starts dropping into blue candles like this, it's telling you, hey, the entropy is dropping out of randomness into trend. And so the entropy price percentile is going to tell you which way that trend's going to go. And the correlation for a move to the top side started building and building and building. Trend up, right? Then you go over here. Now, this is another good thing to look at, right? And this is on the 4 hour. This is random, right? This is mostly random to the downside on the 4 hour. I'm telling you right now, if this would have been a heavy move, right, you would see this entropy drop into, if you see this entropy, if you see the EPP stay red and the entropy drop into trend, I mean, this is a little bit of trend here, right, when you get the light purple, but it hasn't really hammered into trend in my opinion yet. If you do see that, expect this baby to go down. But people are like, well, go down to where, man? I've got my support and resistance lines drawn on these data sets. Is that where it's going to? Hey, man. This is why we have price action volatility range, supports and resistances for the weekly and the monthly volatility ranges, daily volatility range, right? This is why we have distribution levels for the daily, the weekly, the monthly. Those are the only areas that matter at all, period, the end. So right now, price action is back down in here in the weekly volatility range, right? So this is a range right here is where you could see these algos kick in. This 15-minute candle right here that started rocketing, because here's the deal. When we're talking about volatility and you see price action drop into a range like this and you don't see a massive bounce out of here, right, where the algos just turn back on the buy mode, that should be a little concerning, right? To where, okay, that's not where they were at, right? So are they at the center? It never got down to the center of the weekly, or is it at the bottom? This white cross line's the 95.4% daily Laplace distribution range and the daily volatility range S2, that green line. Here's another magnet for price action, plus second standard deviation, bottom of the weekly volatility range. All this is piled together right here, guys. All of it. That's actually the bottom. This is a red cross line. So what's that red cross line? Let's get down to this monthly range. Is that it right there? Here was the monthly volatility range of October, right? There's the R1 of the monthly. That's the first resistance level of that monthly volatility range. We blew right through it. There's the second. There's the second, right? Now we're above that right now. So that is what happens. You get price action above these levels. Those levels flip to support, okay? Just like they teach in traditional TA, except they're just all backwards ass using data sets that the volatility is creating. Why the hell are you putting support and resistance lines at data sets? The volatility from way back where you're charting these support and resistance lines, that volatility has changed, right? And people are like, but look, these data sets lined up, right? There's a reason, and I guarantee you where that other data set came down is because it bounced right on a distribution level, probably off of a daily or a weekly. Okay, it's not because, hey, that's where the level's at. That's where your support should be at, because that data set stopped there. Hell, it's not even the same damn volatility. It's just it happened at that time when you got another data set down there. There was a distribution level there. That's where price action's bouncing and rejecting from, right? Volatility ranges of price action and distribution ranges of the daily, weekly, and monthly. Period, the end. I mean, there's no argument to it. People want to argue about it, I'm sure, but they're not right. They're not going to be right. I'm very confident in that. I mean, I can go back in time and show you on the charts where these things are rejecting from, right? Is there any magical MA right here? Hell, I don't know, because I don't use crap. But I mean, is it pretty obvious here? We're rejecting off the top side of the 68.3% Laplace distribution range, right? I mean, hello. Where did, on the first dump yesterday, where did price action get stifled at? The 68.3%, wait a minute, nope. The 95.4% Laplace distribution range yesterday to the downside, and the second standard deviation. Then we open up the new day, and it ranges in the 68.3 Laplace, finally rejects off of it. Now price action got stifled at the 1SD. We've been closing some candles below here, though. And it should be concerning if we close this daily candle below this weekly level, right? This is the weekly 68.3. That's a hell of a move. Let me show you here. Let's go over here. You throw this in my own index already? I am. So we can pop on a weekly. We got plenty of history, ladies and gentlemen. Whoop. Here we go. Was there? Yep, the one. So you can see, we open up the new week, right? Boom. We shoot up to a new all-time high. Here is the 68.3% Laplace distribution to the top side on the weekly. That little yellow dot right there. This blue dot was the first standard deviation normal distribution. It pretty much got right in between these distribution levels, pulled back. That white dot or that yellow dot right there, that's the weekly 68.3, $60,888. That's what this pink line is right here that I transposed on top of this chart because I want to know where it's at. I don't have it built into that. I put a vertical on a dash right there, right? Because I wanted to know. I wanted to see where it was matching up with. I saw this. This is what's killing me. I fell back asleep, right? I fell back asleep. I'd have been all over this trade, right? Like stink on the doo-doo on the sidewalks of San Francisco. I would have been all over that bad boy. MJ, make a short out of that. All right, let's see. Let me go back over this weekly chart. So we're below the 68.3, right? Do I think this thing's going to drop any farther? It's hard to say, man. It's really hard to say right now. This is a lot of institutional sell pressure. But what's happening right now? What's happening right now? Just like there was an imbalance in sell pressure on the way up to 67. Let's see here. Okay, so here's Bitcoin right here going all the way up. Look at the high right here on the returns oscillator. Okay, of the top of this data set right about here, right? All the way up here, and that was from, where was that at? That was from about 57. So we're talking another $10,000 move up. Look at all the highs on the return oscillator. Are those not all lower highs? So what was happening this whole time on the 4-hour chart, right? Creating stabs of bear div. It finally, the imbalance in the buy and sell pressure between the returns and price action caught up, wham, right, to the downside. Okay, now look what's happening. So from 67 down to, so I mean, it's been about 7K, a little over 7K now, move. Here's the low of the first data set right here, right? Now we're getting higher lows on the return oscillator. There's some bull divs starting to build. It's not on the Z-score yet. The Z-score of log returns is the area, right? The white line is our returns oscillator. The thick line is variance correlated to price action. The inside line is the variance. The outside line is the correlation. When the variance turns pink, it's having an outlier. What's an outlier in statistics? It's a fat tail event. Fat tail event is a 2SD move, right, in progress. So this is how, this Wolfsbane indicator, very powerful. And this histogram right here is the R squared between returns and price action. The coefficient of determination. It's what's telling you what's going on with the correlation, right? Between that and price action. Is it building positive, right? Is it building negative? What's happening? Is the correlation going up? Is the correlation going down? That's why this Wolfsbane indicator, it is going to be published public invite only very shortly here on TradingView, along with our newest edition. And this thing is a powerhouse. Shout out to Van. This is our Alpha Trading Alpha Volatility Z-score, right? This is the line is the Z-score. This is the Z-score of what? Not log returns, not the Z-score of price action. This is the Z-score of historical volatility. And so if this is the Z-score of historical volatility and we have a correlation attached to it, what's going to happen? It's directional now. Volatility in itself is the expansion and contraction of volatility itself is not a directional indicator. But in alpha trading, we understand things that other people, for whatever god dang reason, they want to deny. I don't understand why they deny the fact if you correlate volatility to price action. And to be honest, I don't even know why I talk about this crap. You know, if people don't care, hey, we'll keep it to ourselves. We'll create this massive community of volatility traders. We need other people on the other side of our trades, just like these high-frequency trading firms, right? But we're trying to save people. We want to help people to understand how to trade these markets correctly using volatility, probability, and statistics. I'm not tooting my own horn. I'm not tooting Alpha Trading's horn. The proof is in the pudding. This is how these firms are trading. They're not using traditional TA. People are like, oh, I bet the algos programmed that to bounce on the 200 MA. It's like, you fucking holy crap. But thank you. We'll be seeing you on the other side of our trades. Give him a handshake and be like, continue on, friend. I'm not like other people in other communities that like to bash really the TA traders. Hey, man, if that's the way you want to trade, knock yourself out. But if you want to learn how the big boys, how the smart money trades, get your ass over here, man. Right? For $10 a month. And I'm telling you, our Discord was free for a long time. It was a shit show. We got people in stealing stuff and all kinds of dumb crap. Right? We don't need that. The $10 fee is like to put this info behind at least a little bit of a paywall to get rid of the riffraff. We want people that are serious about this stuff, right? We have 2 levels of the Discord. You come in at that low level for $10, you get a basic chart too, right? With like 3 or 4 indicators. I don't even know what it is right now. It's not going to get any bigger. But that chart is the basis of volatility trading to help you get on the right track. It's got a little bit of volatility. It's got some returns, stuff like that, so you can start the basic stuff. Okay. So, like I'm saying, so this alpha volatility Z-score, look how right here, the volatility starts to expand. Right here, actually. Let me put a little vertical there and show you how powerful. Correlating volatility to price action. And there's literally people out there saying, no way, it can't show direction. Okay, well, I disagree. Right when the correlation goes positive, right when the correlation goes positive, you're starting to see a little bit of rise in the volatility right there. Now that you see this price action going up, right, positively correlated. Let me blow this up so you can see this better. There you go. Right when the correlation goes positive, look at the historical volatility. All the way up. That was the top. Now, here's what's even more interesting. It'll blow your mind. Because we have a volatility cheat sheet. Where did I just move that to? I'm going to flash this back over here. Because when you have rising volatility, right, and it's contracting, price action is going to come down. It's going to bleed down a little bit, right? It's going to bleed down a little bit. Then it expands positively correlated. Boop! This is how this stuff works, right? Maybe I can get my old friend interested in correlating his volatility. We'll see. We will see. That'd be the biggest view on YouTube ever if we got together and talked about volatility and just trading in general. Be fun as shit. We'll see what happens. Right? Not trying to steal any of his people, and I mean, once people drop into alpha trading, there's nobody taking people out of here once they realize what the hell's going on. So that's not an issue, but it would be cool. It'd be cool to talk to some people, come, because I don't care how you want to trade. Man, I don't care. There's enough battles going on in the world. I'm not like these other jokers in this other Discord that can't even keep a damn TradingView account or a Twitter account or any other account because all they do is criticize people and just, it's brutal. Bunch of clowns. Anyway. I'm all for taking all these YouTube gurus and being like, shake them up a little bit, put them in the volatility hurt locker, right? Just bounce them around a little bit. Be like, hey, man, check these charts out. All right? I'm not trying to get you to buy my indicators. These you have something similar. Just correlate the volatility. Start telling people that when you correlate volatility to price action, it gives you direction 100% of the time. You're going to have a leg up on 99.99999% of retail traders if you do that. 100%. Holy shit, it's 301, and I think I've rambled enough. And price action's at $60,441. BTC perpetual futures. All right, this is the end of the week. I might do some surprise streams, but they will pack chat. right behind the higher paywall, which is all good. We got a good crew down there as well. But yeah, I appreciate everybody watching live Discord. We always appreciate you guys. It's fantastic. And anybody out there watching this in YouTube land, the link to our Discord is in the description. Read the welcome message. Look in the shop channel, right? Look in the shop channel. Read the welcome message. We're here for you guys. And wherever you live out on this big, beautiful blue marble afternoon. I'll talk to you guys Monday, 2 p.m. Pacific time. See ya.